we trade, we make money, we trade, we lose some. But I'm going to teach you the trading strategy that will enable you to have more wins than losses. Okay, so let's get started. Okay, and this training you're going to learn the fundamental analysis where we look at online trading, what, where, and where, types of currency pairs we have, how to trade. Then we look at trading news. Then from there we move to technical analysis where we look at Bollinger Band, how it works, the relative strength index RSI, the stochastic oscillator. We look at candlestick pattern. Then I'll show you some trading secrets and rules that you should follow. If you follow strictly, then you are guaranteed 100% profit. Okay, if you follow the trading rules strictly. So now let's look at what we are here for. Here to learn Forex. Okay, so what is Forex? It's an online trading where you buy and sell financial instruments using a special software called MetaTrader 4 MT4 or MetaTrader 5 MT5. MT5 MetaTrader 5 is an upgrade of MT4, has some additional features which you can find in MT4. Okay, so you can trade currencies, you can trade stocks, indices, and commodities. You don't need to have the physical asset or commodity. You only need to profit from change in prices. Now, why trade online? Every person care about his personal finance, and the natural goal is to save money from inflation and increase capital. So traders offers a way to achieve these goals. Many people choose to trade not only as a money bringing hobby but also as a profession. So in both cases, trading is often seen as a way to financial freedom. So compare with other ways to raise money, trading online has the following advantages. You need your mobile device, your laptop or a desktop with an internet connection, nothing more. But though something more, you will need a fast connection internet. The internet has to be high speed internet, okay? And if possible, if you can afford it, could get a VPS, a virtual server, private server, okay? So where your trading will be very close to the broker's server, so we have fast execution of orders. You can learn by practicing with virtual funds before you trade with your actual money. Actually, it is highly recommended. Many people just want to start making money because they see people making money, they see thousands of dollars in their friends or their teacher's account, so they think it's very easy. So yes, it is easy, okay, but a lot more to it, especially your emotion, you know. So the rush to without practicing, you need to, whatever you have been taught, you need to practice using a virtual fund. We call it demo trading. You need to demonstrate for at least 3 months. Familiarize with yourself with the techniques you have learned and especially the candlestick pattern. All right, let's go. So now another advantage is this: you can borrow funds from your broker. That is, you use leverage to increase your potential profits. So like the years back, that only the big short trade forex, big bank, and the banks, the big top short term multinationals, they trade this forex because you need millions of dollars, thousands of dollars to trade it. Right now, it gives what we call a leverage. You are given a leverage to increase your potential, to increase your profit potential. Okay, so you borrow fund from your broker to trade. Is that not good? That sounds Awesome. So also you can do trading when you have time. If you're someone like me, I work, I go to office every day. I'm an engineer, so you trade at your time, your convenient time, when maybe during break or evening or after work, or you are offside or you free. You can trade anytime. Okay, you can trade on the news and keep increasing your knowledge about finance. Now, let's take a look at currency pair. Now, we use this pair as an example. The euro versus the US dollar. Now, this is a currency pair, euro USDT. Okay. Now, the first currency pair here, the first currency here is called the euro. Now, is the base currency. Now, the other one is called the quote currency. Now, if the base currency appreciates, the pair moves up. If the quote currency appreciates, the pairs move down. So now is a tug of war or a competition between these two currencies, the euro and the US dollar. Okay, so look at the economy of the euro zone and the economy of the United States. So if the economy of the United States is good and the dollar appreciates, this pair, if you are trading this euro USD pair, you sell. Vice versa. And if euro economy is doing fine and euro appreciates, you buy this pair. Okay, so that's how it goes. That's what we call the forex majors. So majors, these are pairs, currency pairs that have the biggest trading volume, and this pair move that dynamically, and trading them is the cheapest. Okay, so traders trade these major pairs because these pairs have higher liquidity than other currency pairs. You see the example: the Euro USD, GBP USD, USD JPY, USD CHF, AUD USD, NZD USD, USD CAD. So this is Euro versus USD. This is this is Great Britain pound versus the US dollar. This US dollar versus Japanese yen. This US dollar versus Swiss franc. This is Australian dollar versus US dollar. New Zealand dollar versus US dollar, and US dollar versus Canadian dollar. So if you have any question, ask. All right, so there's another pair called the crosses. We call it Canadian. See this, use this pair as an example now. Canadian dollar versus the JPY. The first currency here is called the base currency, as we saw in the last slide. Then this other pair, this other currency is called the cold currency. So these are currency pairs other than the US dollar. So the previous one, in the previous slide, we saw we saw the pairs. Each of the pair has a US dollar, but here there's no US dollar. So that's why we call the previous in the previous slide those forex majors. That's why we call it forex majors, because the pairs have US dollars. Okay, so now let's take for instance you have the Euro USD, and you are trading. You have a chart. You have the price codes. You have the price. So this is the current price of the currency pair Euro USD at 1.17143. So you see in green 0.01%, and there's an arrow pointing upward here, which means the currency pair has appreciated by 0.01%. Okay, so you buying at this price and you're selling at this price. So you want to buy, you click on buy. You want to sell, you click on sell. All right. So then we also have the time frame. You have the 1 minute, we have the 5 minute, we have the 15 minutes, we have the 1 hour, 4 hours, 12 hours, 1 day, 1 week, and monthly time frame. Now let's look at this chart. Now I'm using gold as an example here. Gold is a commodity. When you trade the commodity gold, okay, this is the currency pair for gold. This gold versus US dollar, XAU, XAU versus US dollar. So this is gold spot versus US dollar. Okay, so if you want to trade this now, okay, this is a chart, a candlestick chart. You have a downtrend and an upward trend. Okay, it's a downtrend and uptrend. Okay, so let's say you want to buy now and you see that there's high inflation. So when there's high inflation, you buy gold, it will appreciate. Okay, and when the government of the United States decide to now combat inflation, to have interest rate, raise interest rate, the US dollar currency will appreciate, so it will start falling. So let's say now in this case now, then there's high inflation, so gold start going up, start going up, start going up. So if I want to buy, okay, if I want to buy is and I need to know where to enter the trade. At what point should I enter the trade? Now looking at the chart, looking at this now, this has formed double bottom. When you see double bottom, it's a buy signal. Okay, so I'll put my buy at the top here. Okay, the top here. Put my buy here. Okay, then I'll put my TP. There's what we call TP, take profit. That's the profit margin. From at this point, this price level, I'll take it to the next or the previous high. Okay, so this is the previous high at this point. So I'll trace it to this place, put it there. So when it get appreciates to this point, I what a buyout. A buyout. So I'll close my trade here. So from here to here will be my gain. From this level to this level will be my gain. So I buy here, I close my buy here. Okay, so this is how it goes. Yeah, trading. So say for instance, you have the CAD JPY, the Canadian dollar versus Japanese yen. You see, when you look up on the chart, you now see it has gone up. Oh, it's going down, gone up. So maybe there's a news that just a, a sudden news just came in that the Canadian drop on falling oil prices. So when the oil prices is falling, what do? You sell this pair. You sell this pair when the oil price is falling, you sell. Okay, but when the oil price is increasing, appreciating, you buy the pair. So at this point, you place your sell here. Okay. Now, how to trade? Um, well, I use FBS Forex broker. I also use Octa Forex. Okay, so these are both great brokers. Okay, so if you want to join my Telegram group, I encourage you to use FBS. Okay, so that you can be getting daily signals from our group. Every day we send Forex signal, okay, where to buy your entry point with your TP and also with your stop loss. Now, how to trade? The logic of trading is quite simple. If you expect the price of gold to increase in a week, you buy gold. So if your forecast was correct, in a week you close your trade and share at your profit. How exactly does it happen in real life? You need to open a trading program MetaTrader that is MT, either MT4 or MT5. So I encourage you to use MT5, use MT5. Click on a new order. So you click on a new order, okay, and then you choose buy. So you see when you click on it, or when you click on the new order, it will bring out this box, this dialog box. You see sell, you see buy, you see market, you see the symbol of the currency you are buying here, you display here. Then you see type. Under this type, you have market execution, you have pending order. So if you are buying at the market price, you leave it at market price. So if you want to place a pending order, that is you should buy at a particular price that is different from the market price. Okay, so you now choose pending order. Okay, so but if you are buying at the current market price, you leave it at market execution. Yeah, instant execution here. So you see volume, that's your lot size. You set your lot size as 0.1, 0.2, 0.3 or 1. Then here you enter the price. If it's the current market price, so you are buying, you enter the price here. Then you enter your TP here, your take profit. At this point you enter your stop loss. Then you click buy. You click buy. So that's it. That's how you buy. So in this slide, we'll look at trading the news. And we'll stop at trading the news. In the next class, on the next video, we continue. Alright, so I'll just quickly do an intro into trading the news. Economy analysis. It is necessary to monitor market news and market news analysis using the economic calendar. So why are you using an economic calendar? You see, economic calendar has releases of dates and forecast where the central banks or labor or statistic bureau of countries that influence price movement in forex, they release economic data, a forecast. They will display the previous data. Then there's a forecast. Okay, so now when the actual value is better or higher than the expected or higher than the forecast, the currency will rise. So if it is worse, the currency will fall. For instance, now if the GDP of a country, now let's say United States of America, was, let's say, was 50, and there is a forecast of 60. So in the economic calendar, there will be a date and time where this data will be released. So you watch it. So on that particular day and time, you watch it when the data is released, current data. So you look out for the actual. So if the actual now is greater than the forecast, the previous was 50, the forecast was 60. Now the actual now becomes something like maybe 70 or 80 or even 65 above the forecast 60. Then what you do, it means US dollar will appreciate. So whatever currency pair you are trading against the US dollar, the US dollar will be stronger than that currency. So if you are trading USD JPY, so it means you're going to buy. If you are trading Euro USD, it means you're going to sell. If you are trading USD Canadian dollar, it means you're going to buy. So if you are trading Australian US dollar, it means you're going to sell. So if you are trading GBP USD, it means you are going to what? You're going to sell that pair. So, and if you are trading gold, you are going to sell. So that's how it goes. So, but the opposite of This analysis is when you are looking at employment. Okay, employment with if they release, let's say, non-farm payroll NFP, when the data is being released. So instead of looking for higher than forecast, you look out for less than forecast. So it means the unemployment rate is reducing. So if the unemployment rate was 200,000 and the forecast is 150,000, which means there's a reduction of 50,000. Okay, so if the forecast is now 150,000 from the previous of 200,000 unemployment rate, and they release the news and the actual now becomes lower than 150,000 forecast, then it means the economy is improving. So the currency pair we appreciate, which means there are more jobs that are being created. Okay, so this is how we do economic analysis. So the next video I'm going to do more on this economic analysis.